I'm a financial planner. I know you've talked to Andy Hart before. He's also, he's a contemporary of mine. I think, you've touched on a few times in both your book and that podcast was about pensions and about long-term investing, and how the financial system really is not set up to encourage, long-term responsible savings and investment because of all sorts of reasons. And so what I wanted to kind of just start, working through with you, with the idea of just get your idea on how we can, help people understand investing and saving and long-term planning better.
Yes.
That they don't, that the financial industry doesn't do very well today. And what can we do to improve that in terms of their education, in terms of their knowledge, in terms of their understanding, but in a way that goes back to your, obviously key skill, which is understanding the internal behavioral things that we all have going on that frankly don't actually make logical sense.
Yeah. So, I mean, to start with, there are lots and lots of reasons why people save less at the beginning of their lives.
Yep.
And some of those are evolutionary, and they're not all irrational, by
Yep.
the way. I mean, you could argue, as I once did in a meeting, look, when you're 25, finding a high quality life partner is probably more of a preoccupation than saving for a distant retirement.
Yep.
And nobody, I think, nobody aged 25 puts their pension provision on their Tinder profile. Okay, it's just not very sexy, And whereas,
I don't know.
No, I suspect that 75-year-old men looking for 65-year-old girlfriends might well put their pension provision on their Tinder profile, but I don't think 25-year-olds are going to do it. I once made the joke saying that, if financial rationality were all that valuable in evolutionary terms, male strippers would dress like accountants, but they don't. They dress as firemen. There are certain evolutionary forces going on where, signifying bravery or altruism or all manner of other things might be a better return, might pay a better return early in life. There's also the weird fact that actually being young is expensive. Yeah. And there's a worthwhile thing which is worth knowing about. It appears in computer algorithms. It appears in foraging, studies of animal foraging, and it's called the explore-exploit trade-off. Right. And generally, we spend more of our time when we're young exploring, and the reason for that is two things. One, we don't know as much, and two, if we make a valuable discovery early in life, it has a 50-year payoff. Let's look at holiday destinations. Have you got young kids or younger?
I've got three young children, 8, 6, and 2.
So what you'll find is they always want to go to a different place on holiday once they reach teenage years, and you go, well, we went to Madeira last time and it was really very nice, so I think we might go back. And one of the reasons you become more conservative when you're older, there are two actually. One, you have more past experience to draw on. So the ratio of exploit what you know to explore what you don't shifts in favor of exploit. You also have less future to benefit from experimentation. Being a bit brutal about it, but you do. And so the fact that patterns of expenditure and consumption in the young are very different from those in the old is perfectly logical in many ways. And the fact that the young tend to be experimental and adventurous and highly hyper-social, and the old tend not to be, is, would be predicted by evolutionary psychology. And so, the need for certainty increases as we get older.
Yeah.
But having said that, nonetheless, there's no excuse for not making long-term savings or pension savings as easy and attractive and social as you can. And I don't think we've done a great job there at all. Now, the first thing I'd say, by the way, is it's ridiculous that the pension pays enormous penalties for withdrawing any money early. Now, the reason I say that's ridiculous is that if you went to younger people and said, effectively, you put money into this pension, you start to discover the magic, which is compound interest. But at any time, 20% of the pension is actually withdrawable without penalty. Young people who, bear in mind, tend to be, they tend to be asset poor,
Yeah.
And they tend, when you're young, to be sort of living hand to mouth. In fact, your consumption decisions, if you're young and not disproportionately rich, tend to be around cash flow rather than anything else. I mean, I would argue one of the things we ought to do is, and Gordon Brown played with this, is actually give young people a lump sum to start them out in life.
Totally.
I'd also agree with Roger L. Martin, who's the Canadian business guru, who argues that tax relief, in other words, that part of your income which isn't taxed, instead of being 10% every year for the rest of your life, we should do it lifetime wise. So you basically go, the first £120,000 you earn in life is tax-free. Yeah. After that, you start paying a bit of tax on everything. And the reason for that is the need to build up capital and the need to build up a buffer is much more urgent in early life than it is in later life, when you've accumulated a whole load of assets in any case, which provide you with that buffer.
Because what we have at the moment,
the pension should be a bit of a buffer, but it isn't.
Yeah.
Okay. It's the opposite of a buffer. It says wave goodbye to this money until you're 55. Now, when you're 25, being 55, you're like talking about a different human being there. You're not talking about the same person in 30 years' time. You're talking about this. I'm 30. What am I now? 56. Okay. It's a completely sort of, when I was 25, being 56 was a complete hypothetical.
Totally.
Yeah.
So thinking about, in terms of that, what you described there as in the minimum taxation, the total cumulative taxation as opposed to per year, we actually almost have the reverse of that right now, which is student loans. And effectively, if you think about student loans are not loans, they're tax, because you don't need to pay student loans back unless you earn that certain amount. But when you earn that certain amount, bam.
You see, a really disruptive argument would be that you gave everybody a student loan, but they weren't obliged to spend it on further education.
Yeah.
Okay, imagine if Ford had managed to secure a deal with the government, which everybody got a car loan of the kind of a student loan, okay? Everybody would go, that's absolutely ridiculous. The car industry has basically seized control of government policy making. But the education sector, the educational industrial complex has seized control of. Now, I would argue there are a hell of a lot of people who might be better off and happier taking the student loan and starting a window cleaning business, opening a cafe, conceivably even, I don't know, opening their own small recording studio, than going to university. But you're not allowed to use your own understanding of your circumstances in that decision, because the money is mandated for education and nothing else.
Yeah. And obviously the housing industry has done the same.
And the housing industry has seized...
housing, but call it the banks through housing.
Yeah, absolutely right. Yeah. So we have these totally grotesque distortions in the economy, which are housing. And by the way, they're interrelated, because student housing distorts the property market to an unbelievable degree. I'll tell you a lovely story about this, which you wouldn't believe. So we moved from Canary Wharf. We eventually moved our offices to near Blackfriars, to Sea Containers House. When we were looking to move back into central London, we were very interested in a quite nice new development near Waterloo Station, quite an interesting area to be. And I go into meeting number 7 on our move, and the chairman says, is describing the various options. And I put up my hand and go, what happened to that Waterloo option? Why is that no longer on the table still? And he said, the developer decided it was more profitable as student housing.
Oh, God.
So I'm going, we're the 5th, okay, we're something like the 6th largest advertising agency in the world, okay, and we're being outbid by a bunch of students on our real estate. And of course, what's interesting, of course, it's very high density.
Yeah.
It is ridiculously lucrative. But I mean, you go into the centre of Bristol, you can always spot student housing, by the way, purpose-built student housing, because there are no balconies. Okay. Yeah. And that's partly suicide, partly mischief, I suspect.
Yeah.
You don't want a bunch of students on a balcony, they'll start throwing things.
Yeah.
And if you go into the centre of Bristol, the housing there is completely dominated by student housing. And this is kind of an absurdity. I mean, it's getting... The other thing I do, by the way, is I'd also mandate that 25% of student places were there for mature students, people aged 25 or above. Mm. So I'd create a social norm for people who don't want to go to university. I'd create a social norm around being able to say, I decided to start work first and decide what to study second.
Yeah, that makes a lot of sense.
Yeah. But no, I mean, that interesting point, which is, I think it's really interesting, which is that the extent to which the educational complex has seized control of what could have been a really valuable loan to set people up in life.
Yeah.
You know, some people, it might be, well, now I can buy a car so I can afford to work 25 miles away from home. You know, there are lots and lots of intelligent ways in which people might choose to spend that money, which are more intelligent than spending it on education.
Especially in education, which again may be a degree that it's a degree from a third-rate university in basket weaving, which someone ends up £27,000 plus interest in the red, for no foreseeable, and yes, all right, this is a purely capitalist argument, but no foreseeable avenue or venture.
Actually, basket weaving sounds disproportionately useful compared to most of the. I mean, at least you can weave baskets, and who knows, there may actually be.
It's a practical skill.
I mean, also the way consumer capitalism is going, you know, hand-woven baskets may become a thing.
You can charge
There's always that chance. You know, it's rather like sourdough bread. Sourdough is a disproportionately inefficient way of baking, but for some reason, people will pay a huge premium for the resulting product.
Could I just go back 1 second to something you mentioned where I wanted to pick up on? So you talked about the idea of, we're talking here about the idea of giving a lump sum for people to use in their youth as a way to benefit themselves in the future. And you also mentioned
let me explain very quickly, which is that my life was transformed. Obviously, you know, I was skint when I was 20, and I'm quite rich now. Okay, let's just park that.
Yeah.
But what really transformed my quality of life was actually having a cushion of capital. It was a small inheritance, really, to start with. Very small inheritance, looking back, okay? But suddenly, when you've got £2,000 or £3,000 sitting in the bank, okay, your decisions over how you spend the money are more driven by utility and less driven by available cash flow. So, okay, I'll take a very extreme argument. You might argue that someone who's skint, who has no large amount of money, okay, but has a sort of Chinese water torture trickle minimum wage income coming in, you might argue that it's rational to smoke, okay, because it might be more pleasurable and more beneficial to buy a car and to quit smoking, but you haven't got the money to buy the car. So you end up doing seeking short-termist pleasures, because if you live hand to mouth, those are the only ones available to you.
Yeah.
I mean, it's worth remembering that really rich people smoke. And I bet, you know, if you told a lot of billionaires that you could smoke safely, a hell of a lot of them would take up smoking. Okay. You know, that smoking's pretty damn, you know, for many people, it's pretty damn enjoyable. I shouldn't say this, but people obviously enjoy it. And therefore, if you can afford, you know, if you can afford a packet of cigarettes, but you can't afford a car, you buy a packet of cigarettes.
Yeah.
It's nothing to do with the relative utility. It's to do with what's available to you at the time. And so one of the vital things with a pension is if it came with a drawdown facility.
Yeah.
Okay, so you actually felt, I mean, there are a whole load of things I could go on about how awful it is. Another thing is the pensions industry is a psychological disaster area when it comes to ad hoc top-ups. So let's say £5,000 lands in my bank account unexpectedly through some weird windfall. Probably the most rational thing to do would be to pop that into my pension.
At your age, yes.
Yeah, actually at any age, conceivably.
Yeah.
Okay, if you redesign the pension more intelligently, because you get the tax windfall. Okay, that's the most rational thing to do. It would involve me probably in a day's work. I'd have to get my wife to look in filing cabinets, send a check. I don't even know where my checkbook is, right? I haven't got a clue. I don't write a check from 1 month to the next. Send a check in a flaming envelope to some weird industrial estate on the outskirts of Gloucester with a covering letter with my pension number explaining what I wanted to do. Then, by the way, they wouldn't send me a nice letter back or a text saying we received your £5,000. That's fantastic. With the tax, that's actually worth 6,000. So-and-so, so-and-so. Wonderful news. Your pension now stands at so-and-so. No, nothing would happen. And I'd have to wait 6 months for my next pension statement and remember to check to make sure that they credited me with the money I'd sent them. Okay. Now, there's a double whammy here. Something that's difficult to do is difficult to do. So we tend not to do it.
Yeah.
Secondly, we tend to infer that things that are difficult to do are things we shouldn't be doing. We go, if this were a sensible, normal thing to do and lots of people did it, they would have made it easy. The fact that it's difficult and bureaucratic means that it's a really big deal. And it's now what you might call a high dudgeon decision to make. Not like moving £2,000 to your deposit account in your, on your online banking app.
Yeah.
It's actually a major bureaucratic act. Okay. And so the very complexity of it doesn't just increase friction, it also increases the level of fear. Now, if you had a system where you could basically, I had 200 people from the financial services industry in an audience once. And I said to them, if I gave you 500 quid in cash now, each of you, and told you you can keep that money so long as you pay £500 into your pension before you get home this evening, how many of you would know how to do that? One person put up their hand, and they worked for Goldman Sachs. Okay. And these were people working in goddamn banking, right? Yeah. I have friends who, a friend of mine has a degree in economics from Cambridge. And I said, that stuff that arrives with your pension, all the paperwork. Yeah. And he said, yeah, I can't make head or tail of it, he said. No. I never read it. No. And actually what I've found is that's actually a lot of that has been flipped in terms of, you think about Robin Hood's crypto trading, online trading, those guys have worked it out in terms of, they haven't just made it easy, they've made it a freaking game. Absolutely. In terms of, it's not just easy. Oh, look, it's just silly money. Oh, you can pop money in. Look, you get free bonus points or whatever you get. And they've totally turned it around, and consequently. And so people are dangerously missing. Their attention is focused on the game. Yeah. And by the way, being in the game with 10% of your wealth isn't a crazy thing to do. No, totally not. Yeah, being in a bit of a game. But what they're missing is the fact that you can actually guarantee a reasonable level of prosperity in later life. That's the good news. The bad news is it's slow. It's slow and it's boring. This was the concept. I just, again, going back to something you mentioned, which was the idea at birth. And this is almost think about it like a state pension replacement system, because everyone's living longer. State pensions are just going to get pushed back into the ages. Yeah. But Chamath, what's his name? Chamath Palihapitiya, who is a US guy. He's a colleague of Naval's. You've probably heard of Naval. Yeah, a big fan of, very interesting guy. So Chamath was more on the investing side. And he talked about the idea of creating baby bonds. So you give someone $5,000 at the start of their life, and it's invested, and they cannot touch it till their retirement. Yeah. And so, just simple compound interest. I worked this out, $5,000 growing at 8% for 50 years, $270,000 or pounds. That's pretty good. You leave that for another 10 years to 60 years, you're up to nearly 600,000. And, yes, all right, this is Albert Einstein's eighth wonder of the world, compound interest. Yeah. But think about how much that could replace from a government perspective in terms of spending. That's, by the way, a very interesting point, which is that, as Albert Einstein referred to it, there are very interesting cases where even hugely intelligent people, by which I mean, awesomely intelligent people, get mathematics wrong because their instinctive understanding of mathematics differs from the reality. There's a very famous thing called it's called the Monty Hall problem, and it's to do with goats and Cadillacs and choosing the doors and do you switch. Google it. I won't explain it because it's a bit tedious. But if you Google the Monty Hall problem, you'll get interested in this. What's really interesting about this is that Paul Erdős, who was probably one of the 10 greatest mathematicians of the last century, got it wrong. Einstein, I think, was famously got wrong a problem someone sent him about a car moving uphill and downhill and how long it would take to arrive under different conditions. Now, I think the thing is that we find exponentials difficult to grasp in our heads. Mm-hmm. There's some interesting experiments because, this one of the central axioms of economics, and there are far too many of them because economics is really a rogue branch of applied mathematics. Or a social science. And it's the number of assumptions it makes which are unreasonable, on which the whole edifice is constructed, is just too many. Stable preferences, known preferences, demand supply curve. The fact that utility is considered to be additive. There's no path dependency in your life, whereas patently there's a lot of path dependency in life. Two bad things happening in quick succession can destroy your life. There are a lot of order effects. But there's also the assumption that money is, Okay, they understand diminishing marginal utility. They've managed to grasp that one. Interestingly, apparently, if you go to primitive tribes, they tend to perceive quantity logarithmically. And so if you go to a tribe which is essentially enumerate, they don't really have a counting system, and you show them two piles, and you have one pile which has 1 grain of rice and one pile that has 9. And you say, make a pile that's halfway between these. Okay, the mathematically literate person will make a pile with 5, but the enumerate person will make a pile with 3, which is kind of interesting, because it suggests we may have some instinctive relationship to quantity which isn't linear. I don't know. I mean, I'm purely pissing around here.
Yeah.
Okay. But it struck me as an interesting finding that now, if you think about it in an evolutionary context, it kind of makes sense. Okay. Because there's a big difference between being attacked by 1 lion and 2. Okay. There's not that much of a difference between being attacked by 301 lions and 302, because you're going to end up dead in any case.
Yeah.
Okay. There are an awful lot of decisions, particularly decisions involving trade-offs.
Yeah.
Where it makes sense to look at money logarithmically. And by the way, a really interesting point, which both Paul Dolan at the LSE makes and George Lowenstein at Carnegie Mellon makes, we tend to focus disproportionately on people who spend too much and save too little. Okay.
Right.
But there is, in fact, a larger group of people in many ways who save too, particularly older people who save too much and spend too little.
Yeah.
And Lowenstein's research showed, so, obviously as a financial advisor, it's going to sound very strange if you start saying, look, to be absolutely honest, mate, I'd go and buy a new car or take a holiday around the world if I were you. But Paul Dolan makes the point, one of which, of course, is the dead don't factor in our equations. And we always look at people who are old and can't quite survive, but we forget there are a load of people who would have made a big mistake saving for retirement because they died quite young. And those people don't factor in our calculations. Lowenstein showed that skinflints outnumber spendthrifts in the population.
Wow.
There are people who spend too much. Obviously compulsive gambling is a catastrophe financially. Alcoholism probably is a catastrophe financially, in terms of how it might skew your judgment. Although, but actually there are more people who spend too little. I'll tell you a lovely story about this, which is just local, which is a couple who live not that far away. My wife was talking to one of them, and they went down to the Harvester. Okay. And they went down because they heard there was a special offer, which is that if you ate before 7 o'clock, which old people like to do, I think, if you ate before 7 o'clock, okay, you got a 30% discount. And they walked around the corner to the Harvester. They discovered this offer didn't apply on a Friday, and they walked all the way home.
Yep.
Nothing wrong with that, by the way. Perfectly reasonable decision. I understand it. You might feel slightly cheated by the Harvester. Okay. You might feel slightly shortchanged. Lots of reasons why you might do this. Before you completely understand what they're doing, they lived in a house, 2 of them, in a house worth £1.4 million. Okay. Now, you might argue if you're sitting in a house, a 5-bedroom house as a couple worth £1.5 million, and you're having agonies about whether you treat yourself to the Harvester once a week, you haven't got this equation right either, have you?
This frankly, from personal experience of working with clients in this bracket, is very, very normal.
Yeah.
And I'm not sure you know this, but the FCA, when they introduced their pension freedoms in 2015, which was George Osborne's big reforms, they did Treasury did a forecast for the 5 years on the tax take of what that was going to look like. And it was, I don't know if you remember, the Daily Mail articles were all about people cashing in their pensions to buy Lamborghinis because they had the freedom to do so. And Treasury estimated that the tax take from people cashing in pensions and things like that. They did the study in 2020 to look at what Treasury had raised versus their projections, and they were 20% low. The forecast, sorry, the forecast was 20% too high. People were 20% in that sense more conservative in terms of cashing in their pensions
than would be economically rational.
Than what Treasury forecasted. So it's also anecdotally the number of conversations I have with my clients in that age bracket where it's like, you kind of do the planning, you build a financial model for them. You look at the planning and say, look, you can spend, frankly, you spend £100,000 a year, you still, for the rest of your foreseeable life to age potentially 99, you will not run out of money based on this forecasting.
Okay, there's the perfectly noble urge to want your children to inherit something. But I mean, your property will probably take care of all of that anyway. Actually, I would argue, and Adam Smith argued the same thing, you don't want your kids to have too much of a windfall too young.
Totally, no.
Because it destroys. If you think about it, if I'd started at Ogilvy with 100,000 in the bank, okay, my incentive to make an effort would have been, for the first 7 years, any progress or promotion I receive won't really make a difference to my financial health. So why bother?
Yeah.
I mean, Adam Smith made quite a lot of, by the way, free market economists have favored inheritance taxes.
Yeah.
Because they argue that for all kinds of reasons, but inheritance taxes are kind of a political kryptonite.
Well, it's that and it's that and the NHS. I mean, I think that it's almost like in a lot of ways that the financial aspect about inheritance is similar to, frankly, parenting full stop, which is we call the paradox of parenting. As you know, the only way your children grow is by going through tough times and then developing on the back of that. Yet as a parent, your natural inclination is to not want your children to go through tough times. But you kind of know they have to, because that's how they learn.
This worries me, because I must admit, Jesus, that it's particularly, I think, acute with daughters as well. Yeah. Because if you're a dad, okay, you really want to indulge your daughters. And actually, it only cost a few quid more, but I said, I had to buy a train ticket for my daughter. I bought her a first-class train ticket. I'm looking at this going, shit. She's 20 years old. Now, it was an advanced train ticket, so the incremental cost was pretty nugatory. But actually, is this really good? Should they not experience a little bit of the grimmer side of life to provide a little bit of impetus?
Yeah, I think that there's a lot of sense there. Can I just rephrase? Think about just rotating this slightly around the idea of risk. And people's understanding of risk, because this is a conversation. People's natural feelings about risk is basically, just take it all away. And this has been borne out through the pandemic and all of that sort of thing. And I want the risk to go away. I'm not comfortable with risk, yet life is risk. Everything we do has risk. We walk outside, get hit by a bus tomorrow, or we win the lottery tomorrow. Either way, it's still risk, but there's very different connotations. What do we get wrong with risk?
One thing that's interesting is that we probably are slightly braver if we have safety in numbers. So one of the interesting things where another Treasury forecast went wrong was they thought 30% of people would opt out of those pensions, those workplace pensions. In the end, it was only 10. Now, my explanation for that is that just as antelope prefer to graze in the presence of lots of other antelope, because you don't have to spot the lion. You don't need to keep an eye out for lions. You just need to keep an eye on an antelope who's more neurotic than you are. Yeah. Okay. And if the other neurotic antelope starts panicking, it's time to pay attention. Okay. Now, in the same way, I think we feel inherently comfortable having a pension that's the same pension as everybody we know at work. Partly because we're as much frightened of relative disaster as we know. We'd much rather be part of a collective disaster than an individual one, because a collective disaster, maybe the government will step in, maybe you can bring a class action lawsuit. Perfectly rational in many respects. But also, if anything starts going wrong with that pension, you may not notice, but one of your colleagues will. And so that business of selling financial products collectively, there's a company in the UK called Salary Finance, which suggests that employers should take a much more active, not compulsory, but a much more proactive role in the financial well-being of their employees. Because after all, if you could, I shouldn't say this, but if you can help your employees manage money better, okay, that's equivalent to a pay rise.
Absolutely.
And I've always thought it also interesting that I've always wanted to start a financial advice business which doesn't look at investments at all, it looks at consumption. And I'd ask the question, what forms of consumption are really utility and happiness enhancing? Yeah, have an enduring positive effect on well-being, and what forms of consumption would you be better off without? Okay. First bit of advice is never buy anything at an airport. I have no idea why, but the process of going through an airport turns your brain to mush, and you suddenly discover you've spent 140 quid on a Bluetooth connected weather station for no reason whatsoever, other than the fact you were kind of bored, or you felt you deserved a treat, or whatever.
Or you had to walk through the loop to go. Like,
exactly, you had to walk through that loop, or something.
Someone squirts you with perfume.
Or somehow you're in this weird retail environment where spending 120 quid on a pair of sunglasses seems comparatively normal and sane. But looking at actually expenditure is quite interesting, because, you know, I think there are goods, particularly for the elderly, which if you could persuade them to adopt them, I'll give your listeners a tip: the air fryer, the Philips air fryer.
Oh, right.
It's a strange cooking device. Everybody who owns one basically treats them as a cult. It's a cult. You know, they absolutely love them. They swear by them. Everybody who doesn't own one finds the whole thing baffling. Second thing, by the way, Japanese toilet. Yeah. Third thing, by the way, would be for the elderly, anybody elderly, get a stair lift installed a bit earlier. Don't leave it till the last minute. Okay. Yep. I didn't know this, by the way. It's helpful to any elderly listeners. I don't know if you have elderly listeners, but you'll have listeners with elderly parents. You don't have to attach a stair lift to the wall. They put a rail up the staircase on the ground. You could even remove the stair lift chair itself and just leave a fairly unobtrusive rail. You could attach a tray so that when you go upstairs, your pot of tea, this is a slightly Anglo-Australian preoccupation, but nonetheless, your pot of tea is carried up on the tray whereas you walk up the stairs. Okay, there's a significant safety argument for having this sort of device. That, you know, how many accidents happen because someone falls downstairs? Well, actually, my father's best friend died that way. I know 2 other people who've been significantly injured that way. So there are purchases which we leave too late. Multi-channel TV is another one. You know, it took me about 5 years to persuade my dad to get Sky in the UK. The day he got it, he was an instant evangelist. You know, he's going around all his octogenarian friends at the time going, "This Sky Plus is marvelous. You can pause live television." You know, and so, I mean, one of the things I'd love to do is actually start a financial advice business, which just says, you know, generally, I think spending money on experiences is quite good. You know, people sometimes underspend on experiences. It's also worth noting that you'll probably, if you're 75, by the time you're 85, you probably won't want to do those things. Yep. So don't assume if you get a cruise, not necessarily true of cruise ships, I think, although some people use cruise ships as a kind of cheap medical care in the US. You know, it's kind of alternative to Medicare.
Oh gosh.
But you know, I mean, looking at the psychology of, there's a book called Happy Money, actually, published by 2 people, actually. One of them is called Norton. I think he's a Harvard behavioral scientist. Yeah. How do you spend money that translates best into happiness and well-being? I think people are too reluctant to spend money on tech, actually. I think, you know, if you divide goods by the number of hours of pleasure they give you, suddenly, clothing is actually very bad in that respect, because the average item of clothing gets worn 7 times. If you buy a big 55-inch Samsung telly, to be absolutely honest, you know, it'll pay back. Yeah. And yet you get, you know, one of the things I notice about the elderly is they find spending money on computers or televisions really painful.
But I guess, remember, they went through the 1980s and 1990s experience in their adulthood of trying to program VCR recorders to record, which, if there is one way of putting you off technology for life, you instantly think, oh my God, everything's going to be as difficult as to try to record the X-Files. You know,
there may also be a kind of thing. If you grew up, I always boast about this because it's a very weird boast. My grandparents were the 4th family in Wales to own a dishwasher, and it cost the price of a family car. Yeah. And there may be this abiding thing, which is from a time when electrical goods were really, really goddamn expensive, and they were huge. Televisions were massively expensive in the 50s. Yeah. And so there may be this long hangover thing where you tend to think of those things as an extravagance. Now, I would argue that, look, the amount of intelligence, you know, there are something, you know, 20,000 hours of PhD level science, well, more than that, have gone into the design of an operating system or a laptop. I mean, you know, in a weird way, I think sometimes we don't understand the magic of mass production. And, you know, so I think there is some interesting stuff there, which I think is fascinating, because I think you can improve people's wealth by just getting them to become slightly more thoughtful about where the money is spent. But your point of being, look, to be honest, you know, short of you know, suddenly getting a crack or gambling habit, you're going to have money to you know, I would also argue, I suppose, from a financial point of view, investing in your marriage is probably a pretty good idea.
Absolutely.
Because it always amuses me to see people who, skimp over every last penny and then end up having a divorce that costs $50 million.
It's the most expensive thing you can possibly go through. Not that I've ever been through, not that I plan on going through.
No, I'm terrifies me. There's a late comedian in Britain called Bob Monkhouse. He said, I'd never cheat on my wife. He said, I love my house very, very much.
It is like that. So you've just published you've got a new book out called Transport for Humans.
Right, yeah.
And if I could, it's very new. It's just out, I believe. And one of the contexts, correct me if I'm wrong, but it seems to be a lot about looking and planning for the journey as opposed to the destination.
Yes. So first of all, looking at transport holistically.
Yeah.
And one of the reasons that tends to mess up transport is you make a train faster, okay? But if catching that train involves 40 minutes spent at Euston Station, the intermodal thing is often the greatest obstacle to public transport. It's not the journey itself. Even buses, okay? Once you're on a bus and you're going to the right destination, which is a slightly big if, okay, it's not a bad way of getting around. I'm quite a rich guy, but I enjoy riding on buses. It's actually the complexity of working out the system and generally, the payment system and the general business of shifting from one mode of transport to another, which provides the pain points. And then the second thing is we optimize around objective qualities, speed, time, punctuality, very, very boring things like that, when we should be optimizing around emotional perception and experience.
Yeah.
And they don't, obviously, yes, there's a correlation, okay? If you run a train company where every train is routinely, an hour late, okay, it's a rubbish train company, nobody will use it. I'm not denying there's no correlation at all, but it's by no means an exact correlation. Quite a lot of correlations are like this. They're very messy. Yeah. So we tend to go, people on punctual trains are happier. People on punctual flights are happier than people on unpunctual flights.
Yeah.
Well, what you've got to factor in there is you're in the unpunctual flights data set, you're including flights which are 2 hours late or where you have to stay overnight in a hotel. That doesn't mean you should optimize punctuality to a point where you imagine that people care if their flight arrives 7 minutes late. They really don't. Okay. Even the most neurotic businessman would have built a 1 hour buffer into his journey. Okay. The fact that train companies are fined for arriving at a London terminus 3 minutes late. Now, actually, a London terminus is very unlikely, not impossible, but it's less likely than most journeys to involve an interconnecting change. Okay. Yeah. So actually, being 5 minutes late arriving to London really doesn't matter. It's not like you're going to miss an onward train, okay, or fail to catch it. And yet what we've done is we've, I think, falsely by the way, this applies, Nassim Taleb taught me this applies to IQ. There isn't much correlation between how high your IQ is and how well you do in life at the top end. Okay. What's interesting is that people have always cited this extraordinary correlation between IQ and life outcome. Most of that correlation is driven by the fact that if you have an IQ under about 85, that's what IQ was originally designed for, was spotting people who would struggle in the conventional educational system. Yeah. It wasn't designed to spot geniuses or, a high energy physicists or anything like that. Okay. It was designed to spot people who'd struggle at school. And most of that correlation is driven by the fact that if you've got an IQ under about 80 something, you find it difficult to function in the modern world, hold down any kind of reasonable paid employment. Life is just very tough. Okay. And most of the correlation between IQ and wealth outcome is driven by one end of the graph.
Yeah.
And I think that's true, with a lot of the ways we measure correlation. One thing that strikes me as strange talking about this is that, yes, smoking's bad for you. I'm not contending with that for a second, okay? I'm not for 1 second, okay? But it's unbelievably bad for you if you smoke 40 or 60 a day. People who smoke socially once a week, it's not irrelevant, but more or less trivial, okay? Now, what's interesting is that I've never seen an anti-smoking campaign that disproportionately targets super heavy smokers.
Yeah. No, you're right.
Now, so there is this fundamental thing, which is we look at correlation. I mean, it's very interesting. If you look at, for example, radiation, the assumption in terms of nuclear power safety is that lots of radiation is really bad for you. Therefore, a little radiation is a little bad for you.
Yeah.
In fact, people who live in Aberdeen are exposed to quite a lot of radiation because it's granite. In fact, small doses of radiation are irrelevant or possibly even beneficial. We don't know. And so this assumption of linearity that we extrapolate from correlation, a linearity that isn't there. And it's worth making that note with wealth, because I think some very wealthy people miss the point, which is there is a level of wealth which grants you independence and self-reliance. And also a level of wealth, which means if someone invites you to go for a curry, the decision is, do I want a curry, not can I afford a curry?
Yeah.
Okay. Don't get me wrong, that's worthwhile. I think super wealthy people or wealthy people in retirement sometimes pursue this to a disproportionate extent. It simply has become a game.
Yeah, or it's just learned a behavior that as they've built up over time, and that wealth has compounded, continual over time, but their behavior set was established 30 years ago maybe they were in that progress. So in terms of your book and the idea of the destination and the journey and making the journey more pleasurable, and thinking about this in if we call the destination retirement, or, even push that back, even go, the destination is death. And the journey is everything in between. What in some of those ideas, how can we relate those to either a wealth or an investment part, where people are thinking about how can we help people live a more enjoyable life? And I guess it comes a little bit back to your spending idea as well. But the idea of thinking that things they're going to end up somewhere. So it's not necessarily about the lump sum at the end of the day there. It's about the life in between.
Yeah, I mean, undoubtedly. So in terms of temporal focus, Paul Dolan, again, the book called Happiness by Design, and another book called Happy Ever After, both very interesting books. Kahneman's book, of course, Thinking Fast and Slow. Yeah. Paul Dolan was a pupil of Daniel Kahneman's. And he makes the point that for every person who's too present focused, there are also people who are too future focused.
Yeah.
I mean, an interesting thing I have noticed, for example, is that all my friends who worked in financial services and banking retired very early. Now, at one level, you could say, well, that's fantastic because they could afford to and I can't. Okay. On the other hand, okay, what does it say about a job, which is that you get out of it as soon as you possibly can? A job. I mean, I think all of those people were distinguished enough that they could have said, look, mate, I've got a place in Portugal. I quite like to work a bit flexibly, and I'd like to go down to a 3-day week. And they could have negotiated something. None of them did. Now, I will argue for working in the advertising industry that generally, not all the time, but a lot of the time, you quite enjoy the life you lead within it.
Yeah.
And it is actually rewarding. You sort of make something. It's highly varied. It's fairly sociable. There are a lot of virtues to it. Now, you earn less than you do in banking, but on the other hand, if you can keep going for 8 years happily, that's worth something as well.
Yeah. Now, from personal experience, having spent 10 years on trading floors in the city in investment banks, there was always a common joke that the only people over 50 who were still working for an investment bank were divorced.
Yeah.
Which meant that because they had to keep work, because they built
they had to put another 8 years to effectively get themselves to where they were.
Yep.
Very interesting. Yeah.
Yep. And that's exactly the whole.
I partly justify my existence in the advertising industry by pointing out that, I wasn't there persuading people to buy things they didn't need or want. Yeah. Most of my working life in the advertising industry was literally in the late 90s saying it's a good idea to have the internet at home.
Yeah.
Now, I think we've done that job. I don't think we need to keep on reminding people, just as you don't see ads that say cars, they're a really convenient way of getting around. We don't see those ads anymore. But in innovation, that job has to be done because the two big forces in human behavior are habit and social copying.
Yeah.
Do what everybody else does, or do what seems normal to everybody else. Do what everybody else would expect you to do. Is one strong force. The other one is do what I've done before, because I'm still alive. I did it before. And by the way, in evolutionary terms, both those behaviors are highly rational heuristics. They're very intelligent, non-catastrophic heuristics. Because if lots of people do something, well, it's probably not a disaster. And you benefit, by the way, from other people's experience. If we had to learn everything through our own personal experience, we'd end up kind of, probably dead. Okay. Or life would involve a hell of a lot of expensive and unnecessary experimentation. And habit also makes sense in evolutionary terms, which is the green berries don't give you the shits. So habit is maybe the red berries will be tastier, but I don't know whether they give me the shits or not. They might kill me.
Yeah, well, I guess that's in a way. I'm linking this back to pensions as well. That's what auto enrollment pensions are all about. It's consistent. It's a system. It's not doesn't rely on individuals having individual behavior. It's a system. It automatically credits you. You and your employer get money into a pension every month whilst you're employed. And the bizarre thing was it was only frankly introduced a few years ago, whereas other countries like Australia has had this for years. So it's a step in the right direction. But
are you in Australia or in the UK?
No, I'm in the UK. I am Australian.
Help me out of this one, right? If I were Australian and I lived in Sydney or Melbourne or something, why in God's name would you leave? Is it like this national FOMO? Because I spent 3 weeks in Sydney and I thought this is about as perfect as it gets in terms of quality of daily life, general civility, cultural interest. It's not like you can't buy shit off the internet from the UK if you're really desperate to buy obscure stuff.
But yes, so there's a couple of answers to that. So one, there is the sense of grass is greener. And so
it really isn't, is it? I mean, come on.
It's not right now. But you get the sense of opportunity, and especially coming to London, which was a kind of a rite of passage for most young Australians. It just has this opportunity. It's kind of like
that's the exploit explore heuristic, isn't it?
Yes,
which is that effectively I increase my surface area exposure to possible upside by going to London. I mean, all credit to Australia. Okay, you're a population of 28 million or something, but you've produced 2.5 global megacities. I mean, Sydney, Melbourne, Perth to an extent, but I mean, certainly Sydney and Melbourne are both
5 million plus now.
Pretty substantial cities.
But the other thing was, frankly, you've also got
Aussie rules football, which I don't understand it, but it is the most. I've watched it, and it's because I spent about half a day in my hotel room just watching this. It's a fantastic sport.
It's better live, and B, it's even better to play. It was my sport growing up, and it's everything you need: size, you need skill, you need. But you can be big, you can be small. You just need to be strong, fast, skill, everything. But going back to London for a second, the concept was, as a young Australian, it's the idea of there's opportunity. And as someone who was interested in finance, it was kind of, there or New York, and it was easy to get a visa there. But, in a very hidden way, there were also, I hate to say, more Swedish girls in nightclubs in London than there were in Melbourne, because in Melbourne, there were the same girls that I'd been going to school with. And still there were the same girls, and they just didn't have, it wasn't the international melting pot that a big city.
Actually, in defense of London, it does that better than anywhere, even better than New York or LA. Yeah. Because it is, in terms of a total melting pot, you've got a whole bunch of Europeans, although slightly fewer than before. But also you have literally, you will have a Brazilian community and a kind of, I mean, if you wanted to find the Guatemalan community in London, you've got a huge, the United States was always a bit weak on South Asian immigration until recently. So you couldn't get a decent curry in New York until fairly recently, which is that's a deal breaker for me, I have to say. But no, I mean, Canada, Toronto's not bad, actually, funnily enough, on that score. Yeah. So
just switching this back again to the to the idea of saving and the idea of creating incentive structures or systems, if you like, for either I as an advisor create or governments as a whole create. What else should we be thinking about in that or individuals actually come up with their own? How should we think about this more? What other things can we think about for creating those?
One thing I think is useful is one of the insights of behavioral science is cookie jar accounting.
Right.
Which is you have different pots of money and you think of them in completely different.
Oh, yes. Yeah.
You have an indulgence pot and you have a kind of, Now, actually, although economists think this is completely irrational, why would you partition your wealth? Because in conventional economic theory, it would lead to a slight loss of utility. I think it's a good psychological thing to do.
Yeah.
I think in investment, having a fund, now Nassim Taleb calls this the barbell.
The barbell, yeah.
And I think not only is the barbell good mathematically, which Nassim proves through an understanding of convexity and the Jensen's inequality, but I think it's also good psychologically, by the way, as well, which is that, at some level, if there are certain investments which have a low chance of success, but they have potentially limitless upside and just as important, in fact, more important, finite downside. And so those kind of, you might argue investing in a Broadway play would be a really extreme way of doing it. It's also worth saying that you probably derive disproportionate pleasure when those things succeed. And you might even derive quite a lot of pleasure from them when they fail. I mean, it's not crazy psychologically to put a certain amount of investment in businesses that you think are just useful.
Yeah.
Because had I funded Ocado pre-pandemic, which is a grocery delivery firm, okay, actually my investment would have done very well, and I predicted why it would do very well, which is actually Ocado is a software business that happens to deliver groceries, and if you think about it like that, it can sell its years of learning and know-how to major retailers all over the world,
which is
exactly what it's doing. Okay, and I stupidly I didn't invest in it because I kept arguing that. I'm sure I did the Ocado share price a little bit of a favor, but I didn't do myself any favors because I didn't invest.
Yeah.
But the interesting thing there is I would have felt actually, well, I'm pretty pleased I created that business because during lockdown, actually Ocado is hugely beneficial, and delivery services in general are hugely beneficial to the elderly. There is a pro-social component to investment, and if you can derive a little bit of additional pleasure from it, independent of the wealth it generates, let's not make a complete false dichotomy between charity and greed. There are things you can do which are a bit greedy and a bit useful. And I think there is that dangerous dichotomy, which is I either give money to charity where it's all about the altruism, or it's all about greed. I think you can blur that. But Nassim's point, I think, is also probably a good idea, because the one side of the barbell effectively gives you confidence and security. And the other side of the barbell increases your surface area upside to unforeseen opportunity.
And HMRC have got this right in terms of the tax incentives around EIS, SEIS, and VCT investment. Now, VCT is a little bit different because it's a pooled approach, so you are diversifying risk away. But certainly from EIS and SEIS, that's the thing. One of the things to encourage by encouraging investment through offering tax relief. So not only are you limiting your downside, you're kind of halving your downside, because if an SEIS fails, you get half your money back.
Absolute point. And actually, of course, it's an interesting argument potentially for a guaranteed basic income.
Ooh.
I know you hate those things, but there is an interesting argument, which is one of the reasons why at the time you had a large degree of innovation in some parts of the United States, was undoubtedly that property and living costs were actually very low. So, one of the great, I do see an enormous problem in the UK in the extent to which savings disproportionately are in economically non-productive parts of the economy, like housing ownership. Where the consumption of housing is consumption. It's not investment, and it's rivalrous. Because when my grandparents bought the dishwasher, they were helping to provide early stage funding for cheaper and more accessible dishwashers to the masses. Okay, it took another 10, 20, 30 years. They bought the dishwasher in the 50s, I think. It was made in New Zealand, weirdly. But when you buy a house, you are depriving someone else of a house. Okay, yes, notionally, it should increase the volume of building and construction, but there are all sorts of bullshit reasons why that never happens.
Well, but you've got to fill the house up with stuff, remember, as well.
Yeah, so I suppose you're probably right that actually, that's one interesting thing, which is that you're probably right that large houses in the US undoubtedly partly drive consumption.
Which is an argument.
I would argue in the US, by the way, if I ran for US president, which I can't, because I wasn't born there.
No.
There are a few things which always interest me as kind of national blind spots. I'm always interested. So one blind spot the US has is their level of incarceration. You know, forget about defund the police or any of that other stuff. I think that's a bit of a distraction. I think the thing that those protesters should be focused on is that people are given custodial sentences in the United States for non-violent first offences, which would never result in a custodial sentence in the UK. Okay, I mean, literally, there are people who engage in some minor form of fraud, first offence.
Yeah,
and you can end up with 10 years in flaming Leavenworth or something, right? Okay, that's just bonkers, horrible, bonkers. Yeah. No other country does it. There's a second problem in the US, actually, which is that for some reason you can't borrow ideas from overseas. It's electoral suicide. If you said as an American politician, well, we had a look at health and we thought the Canadians are doing it pretty well and no one seems to die there and it seems all quite efficient and it's sort of a bit private and it's a bit state, so we'll just copy that. Yep. That's unthinkable for the Americans to do that. They have to invent it themselves.
It's kind of
the third thing, which would hugely improve the American economy, which Henry Ford spotted when he helped create the 2-day weekend, is more leisure. If you actually gave Americans 4 weeks of mandatory paid holiday, I think because if you think about it, leisure expenditure is more labor intensive than goods expenditure and more likely to be spent locally.
Yep.
I think you'd help the American economy and probably business productivity. I mean, Germans are on holiday about a third of the time, but they're massively productive when they're at work. Okay.
What about the French?
The French are very productive when they're at work. Yeah. The French, partly because I think the French won't do any bullshit. If you say we're going to have a team working course, they just go, no, I will not do your team working course, you stinking Anglo-Saxon idiot. And they're probably right. But they've got it is actually very efficient when they're at work.
Yeah.
And the idea that Americans, I think, and what you've seen, I think, is fascinating, this thing, the Great Resignation.
Yeah.
Which is the modern 21st century equivalent, 103 years on, of how do we keep them down on the farm now that they've seen Paris, which was a World War I American song, which is you had these Kansas farmers, who are perfectly happy there mending the John Deere for some trivial amount of money. And suddenly, because they'd fought in the First World War, they'd seen Paris nightlife, and going back to shit kick at Kansas farm isn't quite the... And in the same way, I think people have had a glimpse of flexible work.
Yeah.
And they've had a glimpse of a different work-life leisure balance. And by the way, I don't think it's principally about leisure, actually. I think people have worked harder under lockdown in many cases, not all. But what it is they suddenly realize that they value autonomy, free time, not free time necessarily, not necessarily money, but there are two other currencies which are free where and free when. I can work in a place I choose without being forced to travel, and I can work at a time of day that suits me. If you're a carer, single mum, or if you just like cycling in the daylight, right? Take two hours off around lunchtime, go for a cycle ride when it's light, come back in and work when it's dark. Pretty logical. If you're a Swede, I mean, you practically, in the winter months as a Swede, you basically live in the dark. Okay. Now, those things are interesting because they're a classic case of what I mentioned earlier, the air fryer effect. Yeah. Things people only want when they've had them. And you could build into that, and it's a behavioral science concept called, now let me get this right, is it adaptive preference formation? It's probably adaptive preference formation, actually. That, we tend to want what we've had, and we tend to not want what we can't have.
That makes perfect sense.
Which kind of makes sense. We go nuts if we didn't have some degree. By the way, it's a very interesting question with retirement, if you're a financial advisor, which is if you were basically forced to live in a 2-bedroom apartment in a reasonably nice and perfectly safe part of town, okay? And you can have broadband and entertainment and so forth, and there was a pub nearby and you were near some friends, but you didn't have that much money to go on cruises and things. Could you recalibrate your preferences to fit your circumstances? Which I think I could, but maybe I'm wrong. I think I could. My dad did. My dad was forced through kind of financial constraints a few years ago to move out of a big house into a small wing of the old big house.
Yeah.
And he said in retrospect, particularly as he got to 80 or 90, he's glad that he was forced to do that. Now, that may be adaptive preference formation. Had he kept the money, he may have said, I'm so glad I could stay in the big house. But actually, in reality, I think adaptive preference formation is an important thing to factor into retirement, which is maybe a lot of the extravagant things we want to do are a product of us working a lot. And it's a kind of L'Oreal effect because I'm worth it. You know, I've bust a gut over this financial contract, or I've worked on a dealing room floor for, 12 hours a day for 5 days. I bloody well deserve a $3,000 suit. And maybe when you're retired, you can just reshape your utility function.
Well, again, anecdotally, having conversations with clients in this sort of scenario, so many of the time when you're doing the kind of like projected cash flows around, right, what does the future look like? A lot of the time, the consistent answer that comes back is, look, we just want to live basically the same life we're living now. There really isn't.
But actually, I mean, there's a really interesting question, by the way, which is, do people retire because they want to stop working, or do they retire because they want to stop commuting? Now, flexible work and Zoom may completely cause us to rethink retirement.
Yeah, no, I totally agree.
Because you have some guy who's 65, he's got a huge amount of so arguably the ratio of money we put into pension versus some sort of health insurance, in other words, incapacity insurance, should shift. Because, I could probably find, Ogilvy could probably find shit for me to do, assuming I'm mentally sensible and, and not in permanent pain or something.
Or, NED work or board work or, consulting work.
But I mean, even, okay, it's worth paying me a bit of money just to hold on to my Rolodex, right?
Yeah, absolutely.
And it's worth, it's worth paying me a bit of money to have me on call occasionally to answer a question or adjudicate or whatever. And so, if you're a 6-year-old accountant, you've got a house in Portugal. I'm stereotyping them a bit, but you've got a little place in Portugal near a golf course. Okay. You don't actually retire because you want to stop doing accountancy. You retire because you want to play more golf or you want to spend more time in Portugal. Well, they're not mutually exclusive anymore. We assumed they were, but it was a false dichotomy.
Yeah. And I think one of the big things that we talk about is moving the needle in terms of the idea of sustainability of income is people working, albeit part-time and probably more likely part-time, but working through their 60s, because there's two main reasons why that has such a big impact. You're funding.
It's good. Sorry, it's good for you. I think instant retirement is very bad for you. I think tapering off. Yeah. My dad actually discovered a second career in his early 80s selling books on Amazon. He had a huge book collection, but other people came to him and said, can you sell these books for me?
Yeah, I like it.
And he absolutely loved it, actually. Yeah. He doesn't do it anymore, largely because all the worthwhile books got sold. And he's not really in the business of selling, paperbacks for 50p.
No. Yeah, so the idea of A, your funding's part of your cash flow in the 60s, but B, the capital that you're not spending then compounds even more. And so it is a real double whammy. And I think
a huge double whammy. Yeah.
And the idea of I remember someone telling me a story about the BBC pension fund back in the 50s was the most overcapitalized pension fund in the UK. I don't know this for a fact.
That's probably the David Attenboroughs who keep on working until their 80s.
But this was it was in the 1950s. It was overcapitalized because it was like the BBC newsroom was hard.
I bet David Attenborough's got one hell of a fucking pension.
I'm sure he is. Yeah. At that point it was hard drinking, hard smoking. Yeah. You know what? And then they did things like A, people got healthier, and B, then the BBC started employing women. The idea of just making it an equal environment. And all of a sudden, the pension
which incidentally, employing women probably makes the men healthier.
Well,
because if you're in a mixed gender if you're in a single gender male environment, it will become very boozy and Well, there's a lovely story about this, which you'll love, which is it was someone at a golf club in East Kent.
Sorry, and they had golf.
Golf,
not golf.
And they. Some admiral came to play.
Yeah.
And they had this extraordinary experience in the British Navy where they started allowing women on board ships.
Yeah.
Ships of the line. And then the Navy had employed women before, but not on combat vessels. And they had this massive problem because they suddenly had to take on board much more fresh water than they had before. And in their sexist way, a few of these naval people go, yeah, it's bloody women on board, isn't it? You know, they're showering for hours and they're always washing their hair. They realize, no. There are only 4 women. There's no way they could possibly account for this increase in water. It was the blokes. Because there were women on board, they were washing much more assiduously.
There you go. Yeah.
Whereas when it was an all-male ship, they basically let themselves go a bit.
And it's the concept of being married. It extends your life as well.
Yeah. For the man, I'm not sure it does for women. No. It's a bit asymmetrical, that one. Actually.
Oh dear, Rory. Look, we're coming up to it. Well, I think we've just gone over an hour. Look, I really appreciate your time. I don't want to take you.
But let's. I mean, we do need to rethink this. Do we need more money spent on critical healthcare because knowledge workers can continue to earn money in that magic marginal period in your 60s?
I think it makes a lot of sense, and
which does make a lot of sense.
I'd love to continue the conversation with you, but for today, I'm just going to cut it there. So, look, Rory, thanks so much for your time. I've really appreciated that. If anyone wants to reach out to you or see your stuff, what's the best way to do it?
Oh, Twitter, probably. If you've got any questions or follow-up, at Rory Sutherland on Twitter. Can't go far wrong. And the book is called Transport for Humans, Are We Nearly There Yet? And it's co-authored, in fact, much more authored by him than me, Pete Dyson and Rory Sutherland.
Excellent. All right. Excellent. Fantastic. Thanks, Rory. Thanks for your time.